Welcome back, everyone. Hope you're having a great day, and thanks for taking the time to join me within this GameStop daily recap video. Trading a little bit up today. We're up almost a full percentage point, a little bit down here after hours, mid-session. There, we've got three more to go, but we never really see too much volume in the quote-unquote scam hours. Now, I don't necessarily agree that way myself. I really like pre-market and after hours. There is no halts in this time, which will allow liquidity to flow when it needs to. And a lot of the time, the halts they break momentum, right? You get a halt, and now there's sellers on the open of the halt, where if it didn't halt, they wouldn't have that time to consider the risk and act appropriately. They just buckle up and go. So the stop in momentum, because a halt is 10 minutes, right, can really just slow things down. And that's a big reason why I love pre-market, why I love after hours. You do see a little bit more sustained flow when things start to happen. Of course, if things aren't happening, there's no volume, you're not going anywhere. It just, trades sideways, ticks up and down, clears the order book, does absolutely nothing of value. But today we have some earnings, right? We have Kohl's earnings, which is similar sector, retail space, right? We have Nvidia earnings, which isn't, but is a big indicator for the market as to which way we're going to flow, right? Are we expanding upwards or distributing downwards? So Nvidia is down a little bit on that earnings. Kohl's is way up, right? So kind of getting mixed signals here. The thing I liked about it is, when we look at Kohl's earnings, they have a surprise earnings per share of 88%. That's pretty good. And 30 cents expected, coming in with 56 cents. And then better gross margin, lower expenses, improved net income. Does that remind you of anyone? And then they gave raised guidance, which is really good as well, from like 10 cents, 60 cents to 0.5 to 0.8 or something. I think we have this here. At some point, they raised it from 50 cents to 80 cents, from 10 cents to 60 cents, right? So that's going up, which is nice. It's all the same. I also took a look at Target, because Target had earnings just the other day, but they got murdered. They got absolutely dunked on. But the thing is, Target has that boycott going on, right? So that might be not a great space to look at as the ramifications of that boycott become realized in these quarterly reports. And another thing, I looked at the Hasbro 10Q today. We're having an argument about Magic the Gathering. I make Magic content on Hello Good Game, my other channel. 50,000 subscribers, by the way. Check it out. Come play some Magic. And collectibles, Hasbro's collectibles year over year is down 10,000%. Those are like Trump percentage points, that's absolutely crazy. So the collectibles, the toys, are getting absolutely murdered. And currently, Wizards of the Coast and that tabletop is floating. Hasbro is almost 50%, which is a little aggressive, I think. So tariffs starting to show on these reports, right, where companies aren't really getting as much product, right? A lot of their inventory is decreasing because they don't want to, and specifically with seasonal things, or again, we're talking about Magic the Gathering as an example. They have set releases each quarter, right? There's a new set, and new sets will sell, but old sets don't sell as much. And if you buy or create, because they're making them, right? If you make too much of a set and you only sell 60% of the set, that's a lost cost, and that is okay when it costs you nothing to make these cards. But now that the cards are becoming more expensive, with the supply chain and tariffs, they don't want to be making as much, because their overhead is increased, obviously, and that profit margin is decreasing. So, um, yeah, I think we'll see a lot of reduced inventories, right? I think we'll see a lot of companies looking to reduce their overhead, like we've seen GameStop do, and just to weather the storm, unfortunately. So, um, things are tough out there, right? So I'll just get ready for that. But with that being said, we also have some meme stock momentum and short covering activity here, which is great. They're talking about cost discipline, proprietary brands with Sephora at the checkout. If that's how you're turning your business around, you're putting makeup at the checkout till. If that's all it takes, GameStop's going to be just fine. Let me tell you what. No, that's brutal. That's not good. Short interest on Kohl's, 32%. That's substantial. And the market cap here only 1.8 billion, which is big. Now I'm not saying go buy Kohl's. What I'm saying is let's compare Kohl's to GameStop for anticipation for earnings. Now we're gonna have earnings every day in the next couple of weeks as we wait for GameStop earnings. And if it's a similar sector, we're gonna pop in and see, because a lot of the times these things flow together, right? It's like earnings season, all the companies are like hidden green, popping up 10%. Great. Other times, not so hot, and they're all dropping like flies, right? So, just kind of getting a feel for the temperature of the current environment. And yeah, so Kohl's gets a massive run here, spikes up as high as 17 almost, down from a low. Yes, look at this liquidity graph. That's so dirty. You know how disgusting this is, right? Brutal. What a nice position to take here on that dip. Classic dip before the rip. And you almost see it as a hedge flip. That's the way I look at these. Where market makers are flipping the hedge long, but to do that, they have to clear old positions, right? And then they're doing the same thing here. We see that on GameStop when we trade at Gamma Max, or specifically above Gamma Max. You'll see that the hedge flip, and you get like one last super spike before it hammers down, and that is them or the market maker, in my opinion, repositioning for that new movement, right? Clearing out any old orders that they need to. So, I mean, that's Kohl's, that's earnings. NVIDIA was here as well if you want to see it. Lots of rambling in these videos, but I'll get more concise and coherent as we go on. A big drop, not that much of a drop. 3.5%. I mean, it's a massive company. It's worth $4 trillion. So it'll get bought back up, I'm sure. Does this spark a market-wide sell-off? Maybe, because we're so high. We need to retrend. Just for my own sanity, like the market's going so hard. And I do a general market recap in the other video with my day trades as well. If you're ever interested in that, check it out. We're supposed to be talking about GameStop here, but just it's earnings. We had earnings released, is kind of why we're going through it. Somewhere here for September 9th, which is great. Announcing it a little bit later than expected, but they're pushing it back a little bit too. So that's going to make up for it. Shares to borrow, our fee, our utilization, which has dropped substantially. We were at 65%. I think yesterday we're kind of coming down to this 55%, depending on where you get that information. Max Payne is chilling, and IV is chilling as well, just kind of tracking sideways here. I mean, we're trading sideways. The price is sideways as well. At about 62. Typically, I would have expected a pre-earnings run-up to have already started. It hasn't. Maybe we're just locked in accumulation forever. I don't know. GameStop short interest is like 17%. Looking at the call chain, we did see some substantial volume today on the October 17 25s. Now, this is an expiry that I like. I find this quite suitable, And I find the strike pretty decent as well. They're not risky playing these 30s. They're sinking that money in right where it needs to be. Could be a little closer. Could be a little closer, right at the money, maybe in the money. But this is looking really nice. So let's see if this can hold and build. And, maybe we get a pop on the stock like Cole's got. And that's going to put these in the money. And, everyone's going to have a good time from another earnings cycle. Aside from that, a lot of weeklies, but they're down again, right? A lot of these are down, and you can see how some of them are up, some of them are down. That's really depending on a buy or a sell as the last transaction because the spread is horrendous. Like you see, the ask here is 115, but the bid is 98. So you're down, 15% the moment you buy this, right? And the guy who sold it to you is up 5%, right? Or whatever it happens to be. This is not bad, the bid and ask, but I bet it wasn't that tight beforehand, right? So sometimes the spread is really aggressive, and that's why we like to play strikes with general liquidity in them, right? Look at that open interest, because if there's no liquidity, the spread is going to be horrendous. Like, look at this. Because there's only 129 contracts here, one volume on the day, 130 to 172. That's a massive discrepancy, right? That's brutal. Because you're not going to get filled at 130 and be able to sell at 172. You're going to have to get filled at 172, and then you'll be able to sell at 130, right? So you don't want to be involved in that. Definitely be making sure that you're in a strike with some open interest so you can trade in and out with the volume, right? You need that liquidity. Yeah, so weeklies I don't really care for. We can move out though. The 5th is pre-earnings, so you don't really expect much here. Since it was released, maybe people are rolling their positions to a more appropriate date, because it's obviously not the 3rd, it's the 9th, so we could expect people to kind of push to the 12th and beyond. This is looking pretty dead though. I mean, it's a little bit. Oh, actually, this is not bad. I thought this was be 30, but this is 25. This has more action in it than I was expecting. Anyways, the 19th is chilling as well. Lots of 25 across multiple expiry dates. 25 is looking pretty lit. Not much here. This is a dead chain, so this is like kind of a week you probably not want to play on at all. As is this, right? It's super duper dead. But October 17th we really like, and we see some volume on those 25s today. So we're gonna keep watching this, and like, this is the start of a ramp. Like, you want to see a ramp? This is it. Like, these 30,000. If we can, and I know these are at 30, which is gross, but like I said, if we do get that plus 25% pop, then it can push these to where they need to be and still have a month left, right? Because September 9th to the 17th, it's over a month. So that could ignite a run from, September into October that could extend potentially into January, right? Which we can check out here, and it's, big chill. I mean, there's so much already built. I just worry that what's already built is so far underwater that, it might not really get to where it means anything. And then we're chilling. I seen a bunch of people talking about January 2027s, 30s, but I don't see anything. Is the thing. I do see a lot here, right? A little bit closer to the money, and in the money as well, but nothing really new. I'm guilty of these 65s. I have some of these. They're pretty red. A good time to average those down probably this week though, if you needed to. As we do have that earnings date, and we'll have to just wait and see. As far as our technicals go, we're trending up. Like, so we have our bottom trend line here, which is bullish in nature. We have our bond low, right? And then our local low, which we're not even touching. So it's like these next few days are pretty important for us. Whether, and this is a 4 hours, we've kind of been looking at it on the 1 day, so it's keep you guys used to that chart maybe. Um, there's such little room for us to go down uh, that it's more likely that we retrace up into earnings. Um, I was expecting a manipulation leg on an AMD pattern here. Maybe we get a post earnings dip, or maybe it dips on earnings. I don't know, or maybe it doesn't. Right? Like, there's no guarantee that this pattern plays out. It's just something I'm looking for if the trend line breaks. Right? But it might not break. It might hold and go from there. Right? Just as we would. So yeah, we're just more or less consolidating in a period of accumulation, tracking down on trend here, right? This is a bearish trend line. We need to reclaim our moving averages, right? All three of them. I'd love to tell you that this got, this is the bullish stock and it's gonna, rip tomorrow, but it's just not what we're seeing here, unfortunately. Could it go? Absolutely. Do I want it to go? Of course. But are we screaming upwards tomorrow? I certainly don't think so. Not yet. And if we do, what a pleasant surprise, right? And that's the thing, right? We use these indicators, but let's remember they're lagging in nature. And you need price movement to precede them for the data that goes into the equations that gives you the indicator, right? So sometimes the price movement is quite extreme, right? It's quite volatile, and we can move up 20%, and the indicators are trending bearish, but now they're gonna go bullish after this massive move. So just because it looks bad doesn't mean it is. And it's always darkest before the dawn. But we do have our earnings date. We got a week left here, which is awesome. So I would expect an earnings run up, but if we don't get one, we don't get one. And honestly, if we don't get a run up, it makes me expect that earnings will be good, which we kind of already know it will be. With the Switch 2 sales, we have the sale of the Canadian operations, I believe. At the beginning of the power packs, I suppose. That might not be till next earnings report, but a couple things there that are pretty good, specifically those Switch 2 sales. And if we don't run up into earnings, then I expect us to run up post earnings or at earnings, right? Like a big spike up, like we've seen Kohl's do. So, eyes on. If you have anything you'd like me to look at, hit me up. I was even thinking, that we had such good engagement on the Richard Newton thoughts and opinions where he retired there. And as someone who didn't pay attention a lot, it would appear to me that many of you treasure this guy, which I appreciate. Any GameStop content creator or investor, of course. But maybe we pick up the torch and we kind of dig into some of those theories for you, and it can give us content to go through every day. Or if the technical analysis that I provide is adequate, that's cool too. We've been doing this a while, so I may oversimplify things for you. So don't be scared. Ask questions if you have any, or if you have information, because I don't know everything. Obviously. So if you have any information, feel free to share it. You can teach me a thing or two as well, and we can kind of go through this together, right? Typically, I would post to Supersong for years now, but I've never had the karma to do so. They don't like me over there, so we're just doing this now, and then that can kind of provide me with a journal or a journey to show people in the future, right? Which is great, not only for GameStop but also for my day-to-day market analysis and day trade review, which I truly treasure, right? We've got that absolutely dialed in. So jump over there if you're bored. We've got like another review for you here today and every day. If you'd like, drop a comment, subscribe to the channel, and yeah, make sure to like the video. That helps out a lot as well. But most importantly, kick back, relax, enjoy the rest of your day, and we'll see you tomorrow.